Have you ever wondered how to make money while you sleep? It sounds like a dream, doesn't it? A tantalizing vision of wealth and freedom that seems too good to be true. But let's get real for a moment. There's a common misconception that passive income, the kind of income you earn without actively working for it, is easy or immediate. That you can simply flip a switch and watch the dollars roll in. But it's not that simple. Well, in this video, I am going to reveal the truth about passive income and introduce you to the concept of investing as a means to achieve it. You see, many people miss the point when they try to generate passive income. They chase quick fixes, get-rich-quick schemes, and overnight success stories. But if I tell you with the right approach and mindset, you can make your money work for you, even while you sleep? Let's dive into it. Suppose you're a beginner in the world of investing. The allure of making money while you sleep is tempting, isn't it? But before you dive in head first, it's crucial to understand that investing isn't a get-rich-quick scheme. In fact, it's far from it. You see, a common misconception is that investing is akin to gambling. You put your money in, cross your fingers, and hope for the best. But that couldn't be further from the truth. Investing isn't about luck. It's about strategy, understanding the market trends, and risk management. So how can you overcome this misconception? Start by educating yourself. Knowledge is power, and in the world of investing, it can be the difference between profit and loss. Read books, take courses, listen to podcasts, and follow reputable financial news sources. Don't just rely on hearsay or get swayed by market hype. Now, onto the practical side of things. Understanding market trends is a significant part of investing. You need to know what's happening in the economy, both globally and locally, and how these events can impact your investments. This might sound intimidating, but don't worry. With time and practice, you'll start to see patterns and make informed decisions. Last but not least, let's talk about risk management. Investing always involves a level of risk, but managing that risk is key. This means not putting all your eggs in one basket and diversifying your investments. It also means being clear about your financial goals and risk tolerance. Remember, it's not about making a quick buck, but growing your wealth steadily over time. So why is learning to invest correctly so beneficial? Well, it's simple. When you understand how to invest effectively, you're not just hoping to make money. You're strategically planning for it. You're making informed decisions based on research and understanding, not just tossing your money into the wind and hoping it lands somewhere profitable. In essence, learning to invest correctly is like planting a seed. It might take time and patience, but eventually that seed can grow into a fruitful tree. And when it does, you'll reap the rewards of your hard work and dedication. Learning to invest correctly can turn your financial dreams into reality. Now let's imagine you've started to build some savings. This is where understanding the stages of investing becomes crucial. There's a widespread misconception that all investors should follow the same strategies, no matter what their financial situation is. This is far from the truth. Investing is not a one-size-fits-all game. Your financial stability and income level dictate the investment strategies that will work best for you. If you've got minimal savings and a limited cash flow, your focus should be on building a solid financial foundation and gradually increasing your income. As you move up the ladder, your strategy should evolve. When you've got a high income and significant cash flow from a business or job, you can afford to take more risks and diversify your portfolio. So remember, your investment strategies should adapt as your financial situation changes. Tailoring your investment strategy to your financial stage is key to successful investing. So you've got a grasp on investing basics and you're ready to jump in. But before you do, let's talk about building a solid financial foundation. Many people think that investing is a quick fix to their financial woes. But that's a misconception. Investing isn't a magic wand that instantly solves money problems. Instead, it's a tool that works best when combined with good financial habits. Think of it like this. You wouldn't build a house on a shaky foundation, would you? Of course not. You'd make sure the foundation was solid first. The same goes for your financial house. It's crucial to focus on increasing your income potential and cultivating good financial habits before diving headfirst into the world of investments. These habits include budgeting, saving, and eliminating debt. Once these are in place, your investments can truly flourish. Remember, investing is a journey, not a sprint. Before you swim with the sharks, make sure you can float. Imagine you're now a confident investor with a growing portfolio, but here's where the real grit comes in. Long-term planning and discipline. There's a common misconception that investing is about making a quick buck. But let's debunk that myth right now. It's not about timing the market for quick gains, it's about time in the market. So, what's the effective strategy to overcome this misconception? It's simple. Consistent contributions over time. This is where the concept of dollar-cost averaging comes into play. It means investing a fixed amount regularly, regardless of whether the market is high or low. This way, you buy more shares when prices are low and fewer when they're high. Over time, this strategy can potentially lower your average cost per share, making your investment more likely to generate a profit. Why is this strategy beneficial? Because it takes advantage of market fluctuations without requiring you to predict the future. It's a disciplined approach that helps mitigate risk and can lead to substantial growth over the long haul. Think of it as planting seeds in a garden. You don't just throw a bunch of seeds in the ground and hope for the best. You plant them one by one, nurture them consistently, and patiently wait for them to grow. Remember, investing is not about instant gratification. It's about setting financial goals and steadily working towards them. It's about understanding that there will be ups and downs, but sticking to your plan regardless. It's about resisting the temptation to panic when the market dips or to get overly excited when it skyrockets. The key to successful investing lies not in chasing after the next hot stock or trying to time the market perfectly. It's about having patience, staying disciplined, and most importantly, maintaining a long-term perspective. Because when it comes to investing, it's not about how much money you start with, but how long you can keep it growing. So, the next time you're tempted to make a hasty investment decision, remember, investing isn't a sprint, it's a marathon. So, you're financially stable and ready to diversify your investments. That's fantastic. Now, it's not uncommon to think that taking on riskier investments will yield higher returns. But let's debunk that misconception. Yes, high risk can mean high reward, but it can also mean substantial losses. The key to successful investing is understanding your risk tolerance and setting realistic goals. Suppose you're at the initial stages of financial growth. In that case, it's recommended to focus on high ROI assets and skill building. As your income increases, consider diversifying into stocks, index funds, bonds, or even cryptocurrencies. Remember, each investment option has its own set of risks and potential returns. Therefore, it's crucial to do your research and understand what you're investing in. To recap, the world of investing offers a wide range of options. The right investment for you depends on your financial goals and risk tolerance, so tread wisely and happy investing.